Welcome to Alpha Recap. I'm glad you're with us after the close. We packed today with a bunch of headlines that move markets. And as always, if you have questions, you can reach us at stockalpha.ai.
Great to be here. Lots to unpack from today's briefs. Some AI cost moves, talent worries, and a surprising bump for crypto exposure.
Let's start with the big movers. Microsoft nudged higher after reports it was taking more of its AI work in-house to cut Copilot costs. What did you make of that?
So, what really stands out here is the shift from headline AI excitement to the economics underneath it. Bringing Copilot work in-house signals a focus on margins. Analysts read that as modestly positive for cloud and software profitability.
Right, growth plus cost control.
Exactly. It's one thing to announce capabilities, another to make the unit economics work. If they can trim per user or per query costs, that feeds directly into gross margin models for cloud services and software.
At the same time, Alphabet got some attention after a SWOT analysis flagged attrition and talent exodus risks. The note even called out some striking numbers, about 96%, about 40%, and essentially flat at 0.1% in certain valuation inputs. Walk me through why that matters.
Yeah, that was the other side of the coin. When analysts flag attrition, they're saying execution risk could increase, especially for ambitious AI roadmaps. Losing engineers and product leaders can slow feature delivery, which then affects growth forecasts and multiples.
So Microsoft is tightening costs, Alphabet is getting questioned on talent retention. Two different reactions to the same AI pressure.
Right, when you step back and look at this, the market is maturing in its view of AI. It's not enough to have a great model. The focus has shifted to how you deploy it profitably and keep the people who make it work.
Amazon also popped up with a Form 424B5 prospectus supplement listing percentages. Roughly 22.5%, about 10 and 0.7%, and essentially flat at a few hundredths of a percent. What's the takeaway there?
Those prospectus figures usually speak to offering mechanics or allocation math rather than operating performance. So the market treats it as a reminder that capital raising and potential dilution remain in the background for large tech names.
Not an operations red flag, but something that could complicate valuation comparisons if fresh supply appears.
Exactly. And analysts will flag that in their models when they think supply might change the share's outstanding picture.
Quick pivot. Crypto exposure saw one of the day's livelier moves. The crypto ETF jumped, up about 3 2/3% on heavy volume.
And the volume was meaningful. About 360 million shares traded. That surge suggests renewed retail and tactical appetite for crypto exposure, which then ripples into correlated sector flows and derivatives.
So flows concentrated into ETFs and a handful of names. That was a recurring theme today.
Yeah, that tracks. Heavy volume in a single ETF can concentrate risk and create temporary price leadership for the whole segment.
Let's dig into the litigation wave next. Several securities class actions popped up, including notices for companies across healthcare, crypto custody, transport tech, and sports data. That seemed widespread.
Multiple simultaneous securities notices is a real event risk flag. For the affected names, it typically increases short-term volatility, creates headline risk, and forces analysts to model potential settlement or litigation costs.
And those notices often come with scenario inputs that investors use to size potential recoveries, right?
Correct. The briefs included quantitative inputs, percentages, and recovery metrics, which traders and counsel will use to estimate loss severity and balance sheet impact.
Short reactions.
Court dates matter.
Lead plaintiff deadlines matter.
Those are the likely catalysts for repricing in the near term.
Moving on to mergers, institutional moves, and sector shifts. Caterpillar closed its acquisition of Skycatch to add spatial data and AI for mining operations. That's a clear industrial push into digital services.
This is classic industrials logic. Use AI and spatial data to convert hardware into recurring software and services revenue. Analysts will watch integration cadence and whether recurring revenue really materializes.
And on the institutional front, Asana Partners and Norges Bank Investment Management launched a joint venture focused on local retail assets in the US, signaling targeted appetite for selected commercial real estate.
Right. That kind of selective institutional buying can support pricing for prime assets, even as the broader retail sector faces some headwinds.
Then there was a small cap control change. A junior miner raised about £4.3 million and a single investor took nearly 60% of the company. That reshapes governance fast.
Honest reaction? I was a bit surprised by how quickly governance can change in those deals. When a majority holder emerges, the re-rating or volatility can be immediate.
Big move.
Big move indeed.
On intraday flow patterns, a few names had big volume but only modest price change. That was called out as a signal of crowded positioning with offsetting flows. How should listeners interpret that?
Large volume with small price change often means buyers and sellers are matched for now. The market is balanced. That environment can precede sharp moves once a unifying catalyst arrives, because crowded books unwind quickly when direction becomes one-sided.
So, liquidity is concentrated and correlations can amplify moves if a macro or market catalyst shows up.
Exactly. Traders pay attention to where flows are concentrated because that sets up potential volatility.
A few quick research notes before we wrap. A vendor recognition matrix named a few enterprise players as leaders, and an analyst raised a price target on a healthcare data company citing AI-driven drug discovery optimism.
Those are examples of how research coverage feeds into sales cycles and investor narratives. Recognition can support upsell momentum for vendors, and analyst re-ratings show the breadth of AI as a cross-sector story.
Quick hits. Wells Fargo initiated coverage of SpaceX with an overweight view, and there was a development around lifting restrictions on certain athletes that could affect sports broadcasting. Short reactions.
Interesting for media rights.
Noted. All right, Ryan, let's pull this together. What are the top takeaways listeners should walk away with after the close today?
3 main takeaways. 1. The AI trade looks more mature. Markets are parsing cost trajectories and talent stability, not just product headlines. 2. Event and litigation risk spiked with multiple securities notices across industries, which raises near-term volatility for the affected names. 3. Liquidity and flows are concentrated in a few ETFs and actively traded issues, so correlations could magnify moves when a catalyst appears.
Good crisp list. Anything you want listeners to watch for tomorrow?
Yes. Any follow-up details from Microsoft about Copilot economics, management commentary, or hiring disclosures from Alphabet? Court filings and lead plaintiff appointment motions for those securities notices. Whether the crypto ETF strength persists, and any update on integration or commercialization milestones from Caterpillar's Skycatch deal. Also keep an eye out for clarifications on Amazon's prospectus figures.
Before we sign off, an important reminder. Our discussion is informational only. Analysts note that the data and headlines we covered can suggest drivers of market movement, but this is not a recommendation to buy, sell, or hold any security. Always do your own due diligence and consult a licensed professional for personalized advice.
Right. Analysis in context, not personalized investment guidance. Analysts note momentum or risk, but everyone should match that to their own situation.
Thanks for joining. If you have questions about anything we covered today, head to stockalpha.ai, where you can ask us directly and we'll answer live. For more market analysis and insights, visit stockalpha.ai. Thanks for listening to Alpha Recap. We'll see you after the next close.